The envelope does not look dramatic. It arrives with the rest of the mail, tucked between a grocery flyer and a utility bill. Thin paper. Familiar logo. The word renewal makes it sound automatic, like nothing important changed. Then someone opens it at the kitchen counter. Same house, same car, same commute, same driver. No accident, no claim. The discounts may still be listed too. Safe driver, multi-policy, paperless, auto-pay. And the total is higher anyway. That is the part that makes people stop. Americans do not expect every bill to stay frozen. They have been trained by the grocery receipt, the electric bill, the repair estimate. But insurance is supposed to be the boring layer of stability. You pay it so one bad day does not become a financial cliff. Now the renewal notice itself starts to feel like the warning. From the outside, the household may still look middle class. The driveway is not empty. The fridge has food. The car gets to work. Rent or mortgage gets paid. But the paperwork says protection costs more before anything happens. It says the family that did the responsible thing now has to do more math just to keep doing it. The new American middle class is often standing in the same kitchen, holding the same notice, deciding which piece of normal life gets thinner so protection can stay in place. The easy answer is inflation. That answer feels right because part of it is right. The body shop charges more. The roofer charges more. Parts cost more. A windshield that used to feel minor now comes with cameras, sensors, calibration, and a bill that looks too big for the damage. So when the renewal rises, the explanation seems simple. Everything costs more, so insurance costs more too. But that only gets you halfway there. A renewal notice is not just a receipt for the past. It is a price for possible futures. It is the company looking at what it thinks could happen next, in your area, with your car, your roof, your claim history, and households that are not at your kitchen table. That is why the increase feels personal, even when the logic is not only personal. The obvious reading says the bill went up because your life got riskier. But for many households, that is not what changed. They still lock the door. They still drive carefully. They still avoid small claims. They still try to be the kind of customer the system says it rewards. And the renewal still moves. The discount line is still there. The relief is not. That is where the new middle-class feeling begins. Responsibility still matters, but it now has to compete with a larger cost structure the household cannot fully control. A clean record used to feel like a shield. Then the renewal arrives and teaches a colder lesson. A clean record may protect you from a worse increase, but it does not always protect you from an increase. The middle-class bargain was never just about having money. It was about predictability. Work steadily. Pay the bill. Keep coverage. Avoid trouble. Build a little cushion. Repeat. The renewal notice bends that bargain. What you see is simple. Last term, one number. This term, a higher number. Due date, soon. The explanation may be broad, but the payment is individual. The risk pool is shared, but the bank account is not. The notice talks in policy language. The household answers in trade-offs. The old question was, can we afford the emergency? The newer question is, can we afford the protection before the emergency even shows up? To understand that question, look past the household and into the map behind the price. Insurance is sold one household at a time, but priced through a much wider map. The customer looks at one address, one car, one clean history. The pricing system sees the body shop estimate, the roof quote, the storm map, the medical bill after a crash, and the cost of rebuilding the same kitchen with today's labor. A household sees a garage where the car has never had a problem. The system sees a zip code where repairs, theft, storms, and replacement costs have already changed the price. People are paying more to be protected, while also being asked to absorb more of the first hit themselves. The premium rises on the front end. The deductible waits on the back end. The words on the notice stay calm. Renewal amount, coverage summary, updated premium, effective date. But the household math underneath them is not calm. Every increase in protection competes with maintenance. Every higher deductible competes with emergency savings. Every attempt to lower the premium can move risk somewhere else. The renewal notice is no longer just charging for coverage. It is charging for the right to keep a bad day from becoming a cliff. And once that softer landing costs more, people start changing how they live before anything actually breaks. The consequence is not just that people complain about the bill. The consequence is that people start managing their lives around the possibility of using the thing they already paid for. A homeowner looks at a small repair and hesitates before calling anyone. A driver hears a new sound under the hood and waits one more paycheck. A family with a higher deductible treats minor damage like a household project instead of a claim. The dent stays. The leak gets watched. Covered does not mean relaxed. People still want protection. They know one serious accident, one storm, one major house problem can change everything. So they keep the policy. They cut somewhere else. The takeout order disappears. The vacation gets shorter. The oil change waits. The household still looks functional from the sidewalk. But inside, normal life requires more defensive math. Nobody sees the claim that did not get filed. Nobody sees the repair postponed because the deductible made the decision feel useless. Nobody sees the family choosing a higher out-of-pocket risk just to make the premium fit. That is how the middle class changes without announcing itself. Not by instantly losing everything. By keeping the structure upright while removing small pieces of slack from underneath it. And that is why the practical question is not just, can I get this cheaper? It is, where does the cheaper price move the risk? The cheapest renewal is not always the lowest cost choice. Sometimes the better price really does come from a policy that fits the household well. But sometimes the lower number is created by moving risk into places people do not notice until later. That is why the renewal has to be read in layers. Start with price, but not the number that looks smallest on the screen. Look at the full-term cost. Then look at the deductible, because that is where the lower premium often hides its second bill. The real question is not whether the deductible works on a perfect month. It is whether it works on a bad week. Then, reliability. A policy is not just a cheaper number. It is what happens when the car is in the shop, the roof is leaking, the claim is open, and someone has to answer the phone. Then flexibility. Can the policy bend when life changes, or does every adjustment feel like another form, another fee, another phone tree? And then future exposure. A cheaper premium can feel like relief today and quietly move the real bill into the next bad day. A higher premium can protect more, but drain the cash that would have handled a smaller emergency without insurance at all. That is the trade-off. Price, deductible. Reliability, flexibility. Exposure. The point is not that every household should choose the same answer. A family with savings, an older car, and a short commute may read it differently than a family with one car. 2 jobs, a long drive, and no easy backup. But the renewal notice now demands that kind of thinking. It turns the kitchen table into a little risk office, with a renewal notice, a calculator, and one household trying to guess which risk it can afford to carry. That may be the clearest sign of the new middle class. Not poverty, not comfort. Something in between. Enough to stay protected. Not enough to stop calculating. Enough to look stable, but not enough to treat stability as automatic. So go back to the envelope on the counter. It is still sitting there, still using the same calm language, still pretending to be ordinary paperwork. Renewal. Effective date. Premium. Cover coverage summary. Amount due. But now it reads differently. It is not just asking whether the household wants insurance. Of course it does. Most people understand why coverage matters. They are not trying to live without a guardrail. They are trying to understand why the guardrail costs more at the exact moment the road feels rougher. People are more covered than careless, more responsible than relaxed, more prepared than comfortable. The renewal notice captures that perfectly because nothing dramatic has to happen for the pressure to appear. No crash, no fire, no flood, no emergency. Just a familiar document arriving on schedule, asking for more money to preserve the same feeling of safety the household thought it already had. The question is no longer simply, are you protected? The question is, how much of your cushion did protection just take? That is the new line hidden inside the renewal. Not uncovered, not secure, still covered, less cushioned.